Okay, so now we're going to dive into the monthly review for August of 2023. So the difference between this market report and the one we do every 7 days is the one we do every 7 days, we're looking at what we call lead measures. We're looking at items that we can see as close to real time as possible that give us an idea about how to act in real time and how to make real time decisions in the market. The purpose of our monthly overview is for us to look at the trend of what's happening and see how it compares to August of 2022 and what it looks like the trend is that's happening. So we get into the forest and into the minutia on the 7-day market report, and then we zoom out and get a bird's eye view with our monthly market report. So this is our bird's eye view monthly market report for August of 2023. All right, so let's dive into the numbers on this one. Okay, so new listings for August of 2023, you can see that compared to August of 2022, almost half, like a significant drop in inventory. And again, we know that because we've seen that there's just been a large decrease in inventory, and that's been a big challenge, and that's what's been keeping the prices and the demand higher than the supply. So that's keeping the prices moving in an upward trajectory. Total number of sales for August of 2023 versus August of 2022. Here's August 2022, here's August 2023. You can see again significantly down, a little bit up from last month in July, but it is much lower than it has been. Days on market. So days on market, this one actually surprised me a little bit. Days on market jumped, it went up to 38 days. You can see that August of 2022 was 28 days. You can see September of 2022 was actually 55 days, and then we started trending back down again. And if you watched last week's or the last 7 days market report, this is that window that I was telling you, that September-October window, where we had a window where it was actually a good opportunity for buyers. So let's really keep our eye on the 7-day market report to see if we're getting into that window again this time around. But you can see we had a little jump on days on market. Months of inventory for August of 2023, it's up 1 month from August 2022, but it has not moved in the last 4 months. So what does months of inventory mean? Basically, months of inventory it's our absorption rate. A normal market is anywhere from 5 to 6 months worth of inventory. That's a good, healthy, normal market. Anything below that 5 to 6 month window is considered a strong seller's market. Anything above that 6 month mark is considered a buyer's market. So our months of inventory, basically what that means is if you took all of the inventory that's on the market at the current rate of churn through the inventory, how long would it take for there to be no properties on the market? It would take us 3 months. So we're still in a strong seller's market. There's still not much inventory out there, and it doesn't look like we're seeing anything that's going to change that anytime soon. Median sales price. So our median sales price for August of 2023, it came down a little bit from July, but August 2023 is 1.27. August 2022 was 1.025. So you can see the median sales price has been just increasing over the last 12 months. Again, no evidence of prices coming down. Now, typically, I will go over median sales price. I'm going to do that again because I haven't done it in a couple months, but median sales price can be a little bit misleading, okay? So what do I mean by that? Well, if you look at median sales price, what is the median sales price? The median sales price is the sales price that falls exactly in the middle of the houses that sold in a given period of time. So for example, in this example, you got month 1, we have a house that sold for 3 million, 2.7, 1.65, 1.5, 500, 350, 275, 225, 220. Okay, the median sales price for this month is 500,000 because it's the one that falls right in the middle. You have 4 above and 4 below. So 500,000 median sales price. Month 2, 4.25, 3.5, 3.25, 2.5, 400,000, 395, 385, 350, 315. Notice all of these numbers are bigger than these numbers, but the number that falls right in the middle is $400,000. So if you were using median sales price in this very limited example, that would tell you that the median sales price for month 1 was $500,000. Median sales price for month 2 was $400,000. That's a 20% decrease in the market, or in the median sales price home value. Well, obviously those home values didn't drop because these were all more expensive. It's just where that fell. So why am I saying this? Well, it's important to understand that median sales price is a tool, and it's a good tool to use. It gives us a good idea because when you have, thousands and thousands and thousands of numbers, it gives us a good idea so that we don't have skews based on large and small numbers. But when the media is saying that our prices are falling, they're speaking with regards to the median sales price, and they're usually talking nationwide. So first of all, nationwide does not apply to our market because we do have a very unique market here. But also that median sales price, all that means is that out of the cluster of homes that sold, that price that was right in the middle came down. Median sales price has nothing to do with market value. So when you read the median sales price declined 20%, that makes you all of a sudden think that what you could get last month for $500,000, now you can get it for $400,000 because property values have dropped $100,000. And as you can see from this example, that's not the case. This has nothing to do with property value. Property value is determined by you taking and looking at the actual property and seeing what that property's market value was last month or last year versus this month or this year. And if that property's value has gone up, then it has appreciated. If that property's value has gone down, it has depreciated. But the median sales price can go up and down. This $400,000 house right here is still a $400,000 house that's worth $400,000. It's not a $500,000 house that you're getting for $400,000. So I hope that makes sense where median sales prices can tend to be a little bit misleading. So going down here, the next chart that we need to look at for August of 2023 is the list price to sales price ratio. And you can see that in April of 2023, the average property was selling for about 103, a little over 102% of its list price. And that's been coming down. So August of 2023, we actually hit about 99.9%. So it looks like prices are dropping. So isn't that prices are dropping? This is that the list price to sales price ratio has been coming down. But if you look at August of 2022, this is October, September, this is August, you can see it was down at 99%. So it's still higher than it was last year. And keep in mind, this is 2%. This is 1%. These aren't like 10% drops. These are just list to sale price ratios. So properties are still selling right at their asking price on average. That means that some properties are going above, obviously, and some properties are going below, the ones that have not been priced properly. It does not have anything to do with market value. That has to do with sales price. Because if you take a if you take a $1 million property and you put it on the market for $1.2 million, and that property sells at $1 million, that list to sales price ratio is 20% down because they had to come off $200,000 before they got to that market value for that property. Same thing is true if you had a $1 million property that was market value $1 million, but they put it on the market for $800,000, it's going to bid up to that $1 million. So that's a 20% increase. Doesn't mean the house price went up 20%. It just means that the sales price had to adjust to get to that market value. And what is market value? Market value is determined, number one, by similar properties that have recently sold at that value, and number two, the price that a seller is willing to sell at and a buyer is willing to buy at. And usually those go hand in hand, market value and appraised value. There's usually a little bit of a lag between market value and appraised value, in that in a growing market, appraised values will tend to be a little bit lower than market value, because in a seller's market, prices are escalating faster than appraisals because there's like a 30-day lag. In a buyer's market, it's the other way. A neutral market, they're pretty even. So right now, appraisals can tend to run a little bit lower than what market value is. Okay, so I hope that makes sense. Let's go up here, look at one more thing. So now let's dive into what do we think is potentially going to happen in the market. And so August 2023 versus August of 2022, we showed that market activity was down. So we're down here. We showed that months of inventory was at 3 months. So 3 months is under 5 months. So it's a seller's market. So even though market activity was down, we're still in a seller's market. And then, so what do we expect to happen over the next 30 days? Based on this information, we expect to see increased appreciation. Normal appreciation is anywhere from 3 to 5%. Increased appreciation is somewhere a little bit higher than that, 4 to 6 to 8%. So that's what we expect to see over the next month. Let's see what happens. But again, this is Based on the numbers of August 2023 versus August 2022, the market has slowed down dramatically with regards to numbers of transactions, but the home values have stayed very steady and have actually been steadily increasing. All right, if you have any questions, please feel free to reach out to us.